Hey, Tim Kerley here with your Friday FAQ. I'm going to do something a little bit different this week. Instead of answering a question, I want to give you a recap of the Barry Habib Economic Forecast that we hosted a little bit earlier this week. Now, I don't know, I won't go into Barry Habib's whole bio, but he's been a fixture in the mortgage industry for many, many years, and he makes these economic predictions every year. He's almost always right. The presentation was an hour. I'm going to boil it down for you into about 2 or 3 minutes right now. Really just the stuff that you want to know. But I would encourage you to watch the presentation. And if you're interested in doing that, just respond back to this video or shoot me an email and I'll send you the link over and you can watch it at your leisure. Like I say, it's an hour. Great information about the why, not just the forecast, but here's why we are where we are. Okay, so let's take a look at this. Let me share my screen with you. I'm just using a few slides from his PowerPoint. So first of all here, interest rate forecast. This was an easy one. We anticipate mortgage rates to rise along with inflation. And we talked about that in a video a couple weeks ago. Inflation is what's causing mortgage rates to go up. He says towards 3.75. Well, guess what? We're already there. We're already there on a 30-year fixed, right at that level. Now, he does go on to say, with the Fed's action on what they're doing to try to combat inflation, the softer stock market, slowing economic conditions, his prediction is that rates are going to come down in the second half of the year. And right there it is. Let's see. There we go. Forecast rates rise toward 3.75 first half of the year. We're already there. Decline towards 3% second half of the year as the Fed hikes rates. And he makes a suggestion here that, our clients probably shouldn't be paying a bunch of fees up front to buy a rate down because he's anticipating lower rates at the end of the year. And it might be, an opportunity to refinance and take advantage of the lower rates. And then as far as the housing forecast, household formations, our demographics and all that stuff, which by the way, is very strong for our industry. It looks as though housing will remain strong for some time to come. And he also says, even in periods of weak economic conditions, the housing industry always performs very well. So the future looks pretty bright for what we do for a living. Okay, so he says housing will remain strong in 2022, not quite as strong as 2021. And a lot of that has to do with the rates going up. As you know, as rates go up, then the buying power for our buyers comes down a little bit. It lessens how much they can afford, depending on where the rates land. And then, of course, he mentions here, supply is going to increase a little bit, but it's going to be super tight. You got 3 things going on here: labor supply chain disruptions still, and semiconductor shortages. All that stuff has to do with new housing construction. So unfortunately, it doesn't look like that, those items are going to change at least anytime soon. And of course, COVID is the wild card here because who knows, where that is going to go from here until the end of the year. But I mean, for our clients who want to be buyers, what's the alternative? Renting? Look at this. Rents continue to rise. Increases will remain above 5%, pushing many people to see the benefit of buying, we hope. And then finally, you can see, if you can see that down there in red, they are forecasting high single-digit appreciation. I think specifically he's thinking around 8.5% appreciation for this year. Now that's nationwide. So, every market is different. But still, again, that's pretty strong. From what, historical numbers look like, at least. So hope this is helpful to you and hope that gives you some good news. If I can help you, or if you want to copy the full or a link to the full presentation, reach out, let me know. I'll send it over to you. Have a great weekend and we'll see you soon.